You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. How are you doing?
Well, I'm doing great. I'm wondering about people who invested in the Chinese stock market with their second devaluation of the yuan.
Well, the Chinese stock market has, of course, been a disaster. Not just with that news, but I mean, it's been falling for several months now. I mean, it's basically crashed. It looks like, you know, the 1929 stock market for the Dow or something. But in fact, it's so bad that the other week they actually announced that they were just going to cease trading in hundreds of stocks. You can't buy or sell them because the government didn't want people to sell them anymore. So there you go. I mean, that's pretty extreme measures. Now, what's interesting though is today, yesterday also, the Chinese government, as you mentioned, has devalued their currency, the yuan, by over 2% altogether. And this morning, that caused the U.S. stock market to gap down. In fact, there was selling widespread across the globe. However, I don't really think the market and the markets all over the world really were impacted by this one-day decision. The thing about the currency devaluation, it's very small. It's not significant enough to really impact companies very much that are based in the United States and exporting to China. Just 2%, a little more, isn't that big of a deal. In fact, the Canadian dollar has done much more than that against the U.S. dollar, and so has the euro over the past year. I think it's like 18% or something for the euro. So it's just a very small move for a currency. However, I think more concerning is that it's a sign that the Chinese economy is most likely slowing down. That shouldn't really be a shock to people. I don't know why it is, concerning their stock market has really been in such a big decline. And there's actually data I was reading this afternoon that says that the exports, the number of exports China is doing, has declined by 8% in the last month. Well, we can think, well, that's, you know, trouble for China, but if their exports are declining that much, that would mean much of the world economy is slowing down, or something is going on there. But, you know, that's the news. But I think there's actually some big things happening inside the financial markets. If you want, we can look at the gold market.
Well, what's happening with gold, and is there a connection with the yuan?
Well, gold has really taken off over the past couple of weeks. It sounds very funny to people to hear someone say that about gold, because it's been falling since 2011. It's a very long bear market that's taken place, but gold was up $15 today. It's been up almost $50 in just the past week, which is a big move. And I think it's actually starting a brand new bull market. If you look at the mining stocks, they had been in a big decline for a very long time, but on July the 20th, they crashed about 10%, about a 10% drop. And gold, of course, went below 1100. But two very interesting things have happened since then. First of all, inside the Commitment of Traders reports, which tells us what different categories of investors and traders are doing, the small individual investor, the so-called small fry guy, he actually started short gold at a very aggressive rate. He is the report of last Friday. In fact, the small individual trader with their brokerage account trading in the futures market had built up for himself the largest short position he has had in over 20 years. At the same time, the commercial traders who tend to be right at important market turning points, they tend to be, in fact, net short almost all the time. So when they reduce their positions, that's a real noteworthy. In fact, I remember months ago, maybe back in October, maybe even before that, we were talking about oil and how the commercials had a record large short position. Well, as of last Friday, the gold commercials have the smallest short position they've had in 20 years. In other words, the people who tend to be right have the smallest short position in gold they've had in over 20 years, and then the people tend to be wrong have the biggest short position. And what is effectively beginning to occur with today's move, the $15 move, is that a short squeeze is taking place that's really squeezing these small traders, and they're going to be forced to cover. Now, I think the second thing about gold that's going on is if you look at the mining stocks, they crashed for a 10% drop July the 20th. However, since July the 20th, they didn't go down anymore. They just sat in a very narrow range, didn't really go up or down until just yesterday when they broke out of that range and are now taking off. In fact, today, the gold stocks, or some gold stocks I should say, were among the top gaining stocks in the stock market. If you look at every single stock in the market, a lot of them were in the top gaining list. I'm talking like up 20%. Coeur d'Alene was up about 24%. Yamana was up 10% in a single day. And Silvercore was up over 10%. And the GDX ETF was up about 5%. So these are very, very significant, very, very big gains. And the most interesting thing, another interesting thing I should say about this, is that everyone is totally ignoring this. This is like crickets, basically is what I'm hearing when it comes to gold. Not a single email from anyone about it. Not a single mention I saw on the television about it. And that's how bull markets start, when no one cares, when no one's left, because everyone had sold out before, and some people are so crazy to even be trying to short it, so convinced by 4 years of a bear market. So I think we're in a very significant, maybe perhaps a historic time, and this year on your show, I've been telling people what they need to do is own a 10% core position in gold. And now I think it's finally going to start to pay off. We had to see gold fall below 1100, and that's not fun for people. But now anyone who owns the 10% gold position, they're going to start to have a lot of fun. And the mining stocks, are just starting. So it's a lot to look forward to in that segment of the market, I believe. Now, at the same time, the U.S. stock market is in a very, very also interesting place to actually go down. In my opinion, we've spoken in recent interviews about how the internals are really terrible for the market, meaning most stocks are actually already declining. The number of stocks on the New York Stock Exchange, below the 200-day moving average, is over 60% as of yesterday's close. And while the market averages are only just barely off their highs, that's the type of divergence you see at major tops or the start of a new bear market. And if you look at the market this year, everyone knows the volatility has been very low. We've been in a very narrow range in the market averages. And today, we've been falling really from July, the middle of July, actually July 20th, interestingly enough. That's the day the NASDAQ peaked out. That's also the day it appears that gold stocks had their crash bottom. So it seems as if we're entering an era where gold and the mining stocks are going to do well, the stock market do bad. Now, people hear this and they find that very difficult to believe, or I hear a lot of people that say, I don't want to sell anything because I can just hold and it'll just go up, and I'll just put my stop loss orders in and protect myself. If people want to do, I think people should sell. I've been saying for months at least 10% because we can't predict the top, and now it looks like the top already came. I wasn't able to predict it or call it when it happened. So, but it is what it is. But if people don't believe, still most people don't believe this, and they would just want to put a stop loss order in. Well, I would suggest to those people to put a stop loss order in at today's low, because what we saw today was the markets gap down on this China news very strongly, and then finished the day in the green. Now, a bull will see that price action and think, well, this is great. This is just a correction. We've seen so many little corrections in the stock market over the past couple of years, and this is a reversal, so we're going to go higher. We're just going to break out. We're going to take off. Such people who think that, though, ignore all the internals of the market. If anyone listening would, I think I said this last time, just look through every stock in the Dow and S&P 500, they'll see what condition the market is really in. But most people don't do that. They just look at the ETFs. So many people just trade ETFs. They just look at the television set and hear what they're saying, which is usually talking about some stock that's up a whole lot and not everything going on, because that's what excites people. But if they want the stop loss point, put it on today's low, because if the bulls are right, then the market's going to go up. It won't go below today's low. And if the bulls are wrong and it goes below today's low, we're going to really see the selling begin. I think this basically, I think it's around 2040 on the S&P 500, 2055, 2050, 2055, that area. That's going to be the real key support level. If that gets broken, then the bear market really, really is going to begin.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson from WallStreetWindow.com. Mike, what do you think about Google's move to change their corporate name to Alphabet? What's the deal on that?
Well, they say they're going to do this to restructure their company because they have Google, which, we think of as the internet, the search engine and all the other things associated with it. But they also have all these little investment companies that are part of Google. They are their own corporations that, some of them invest in other companies, some of them do research. I think there's even one associated with something to do with the American space program. And they basically want to separate all these things out and make the accounting more transparent for people. So they're going to change their name and turn Google into a big holding company, kind of like Berkshire Hathaway is Warren Buffett's company. That's what it essentially is. He's not really, people imagine that Warren Buffett is this guy picking stocks in a brokerage account or something, when really his company is a giant holding company. So that's the model, the corporate legal structure that Google is going to take. It really doesn't mean anything for its earnings, though. However, there are still people bullish on the market. They like to buy stocks and they like to buy rallies, even though the market actually is declining. But that's what people love to trade. So that caused Google to gap up, and a lot of excitement about that. However, if I'm right about the stock market, that's not something anyone should buy into. And really, I don't think just a company changing its name and its corporate structure is a reason to buy into a company either. I mean, you think about Sears, a couple years ago. Sears turned into a conglomerate holding company also, and was hot for a few months, and it turned into a very poor stock to hold.
Again, people love the glitz and the glamour, huh?
Yeah, well, I mean, it's very superficial. I mean, it sounds crazy, but most people just buy stocks. They don't really research them or know anything about the valuations and earnings or the fundamentals in any form or fashion. They just see a story and they know what Google is, and there's a lot of people that just buy it because they know what it is, and they don't really have a deep plan or knowledge of what they're really doing. And that's like most stock transactions are made out of such things. I mean, you think about the Chinese stock market, all the madness going on there. Well, a couple of years ago, Chinese stocks were red hot, and they were trading in the United States on various exchanges and going up. I think this was like 2010. They're like among the hottest things in the stock market for 6 months. And many of these companies got exposed to be frauds. They just were making up their earnings. The Chinese laws, I suppose, have some sort of different accounting standards. And it's more, what seems to be more important isn't so much is the accountant good, but is the connections with the government good and solid? If so, then it seems you can float any kind of junk company you can. But the point is that back then people were buying these things just because they went up and just because they would read stories about them, and they turn out, to be frauds. And even the earnings and balance sheets of some of these companies are strange, but that's just the way the stock market is. And when you've had a bull market for years, people are very less cautious, and it's very difficult for people to believe things will go down. I mean, through doing this interview telling you I think a bear market's coming and watch out for this 2050 level, that's where you should put a stop. But I don't know if a single person listening will heed that advice at all. It's just the way it is. But that's okay. People need to realize if they like to buy, and you can make money shorting and buying puts and betting against the stock market, which I'm doing in a portion of my accounts, but most people don't like to try something like that. To them, there's only two options: buy or be in cash, and everyone's terrified to be in cash because they can miss out, and it's also not fun and exciting, and people love to gamble and play the market. And if people listening, want to buy things, my suggestion is forget about the Googles and the Facebooks and run from the hills if you own Tesla, for goodness sakes, and Netflix and some of these companies that are really at wild valuations. Well, just run from the hills. But if you want to buy, look at the gold stock. This is what's new. This is what was in a bear market. This is what's apparently starting a new bull market. Buy into something early. It would be fun. I mean, I wish I had bought Facebook the day it IPO'd, and they would be selling it today. But I didn't buy it the day it IPO'd. I didn't buy some of these high flyers in the stock market when they're $10 and now they're $50 or something. But I can't turn back the clock. I don't have a time machine so I can do something like that. But you don't need one. You can buy things low if you get in early on something, and that's where we are with the mining stocks. And the volume in the mining stocks is coming in. If you look at daily charts of them, there's been more volume over this past month, and today was even a big volume day than there's been in years for a single month. So it's all starting. I mean, I know we've talked about gold before, and I talked about holding a 10% position, but at this point, you can do more than that even.
Mike, thanks a lot for chatting with us.
Thank you. It's great to talk with you.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.